Welcome to this weekly update. I'm Julia Lee, an equity strategist at Bell Direct. And this week on the market, it's been all about rising interest rates. Over in the US, we did see the US raising interest rates for the first time in 2016. And even here in Australia, we have seen interest rates rising, with the 10-year Commonwealth Government bond yields reaching the highest level that we've seen in 2016. Today, Friday, of course, is index rebalancing as well, and we have had some additions and subtractions out of the major indices here in Australia, looking at the benchmark ASX 200 index and Nanosonics being added to the ASX 200 index at the close. This is a company that looks at automating the cleaning process for ultrasound probes. The stock is up 67% in the year to date and should see continued support as part of the benchmark index. But coming out of the index is Oz Forex, which is down 46% for the year. The market concerned about the lack of volatility in terms of FX, which has an impact on Oz Forex. Looking at Australian equity strategy, and this one coming from UBS. UBS having a year-end target for 2017 on the ASX 200 index of 5,700 points. So expecting to see a mild rise on the Aussie share market. Looking at 2017, and it's moderately overweight resources. It's also overweight insurance, while it's neutral the banks, and underweight those bond proxies which are high yield. They've made a few changes to the model portfolio, adding James Hardie as well as Oil Search to the mix, but coming out of the model portfolio are the underperformers of Flight Centre, Gateway as well as Certex shares. Looking at Credit Suisse, and this time focusing in on the US and equity strategy over there. Credit Suisse overweight and positive all three financial groups, although preferring insurance as well as diversified financials to the banks. It's also overweight in consumer durables and apparel, and it favours smaller stocks rather than the large ones. It thinks in 2017 we're going to continue to see the value strategy outperforming and continuing to outperform. Staying with Credit Suisse and looking at commodities which are firing on all cylinders, saying that they expect to see good steel production being a positive for both iron ore as well as coking coal. But the clamp down and the policy reversal that we are seeing in China should be a negative for thermal coal prices. In terms of base metals, it's positive copper as well as aluminium in 2017, although after that it does see a reversal in fortunes. And it says that nickel is on the gradual path to recovery, so staying positive on nickel. Moving on to Macquarie Group, where they're focusing in on the insurance brokers. They're positive on the whole sector, saying that it's a stable, defensive cash flow area with attractive margins, and they have an outperform an AUB Group as well as Steadfast in this space. And finally, given the huge number of fallen angels, having a look at this Goldman Sachs update on fallen angels. Now, these are high PE ratio stocks that have fallen more than 40% or around 40% after seeing a downgrade to the outlook. They're saying that these type of stocks, although we do see a big fall initially, in the following 12 months tend to continue to fall on average of 13%. So no reason to get into the fallen angels. And of course, in the past couple of weeks, we've had some additions to this fallen angels list. On the 2nd of December, we saw Bellamy's falling 43% after its update. And on the 9th of December, Certex falling 37% after its update. So Goldman saying avoid those fallen angels despite the steep share price falls that we've seen. Usually they continue to fall over the next 12 months. So that's it from me this week. It's been a huge week in terms of the market and really focusing in on the interest rate environment for 2017, where we are likely to continue to see interest rate hikes out of the US, and of course that will impact on portfolios. Usually bad news for those bond proxies, but good news for those exposed to rising interest rates, such as insurance companies, as well as Computershare and the likes of the banks. I'm Julia Lee, an equity strategist at Bell Direct. See you next week.